I'm sure now you're ready for some practice problems. Let's look at a few. So this is a scenario, business scenario, wherein a bunch of transactions have been given. You have to identify which of these transactions need to be recorded and how. There are some simple journal entries, there are some complex journal entries, there is a sequence, there is a chronology as well. So let us read through, identify the key events and the journal entries which need to be written, and then actually write those journal entries. So on April 1, 2015, we are also going to keep track of the time now. So this is the beginning of the financial year. Mayank and Rajat, let's say two partners, they start a business. Okay. Well, they start a business, very good, but no journal entry because right now there is no money that is exchanging hands. There is no monetary transaction which is happening. It's simply an event, a qualitative event. Two friends come together, we are starting a business. Now Mayank brings 8,000 million cash while Rajat got 3,000 million cash. Now this is a monetary transaction. This is the first transaction that we are going to record. And this transaction is that the share capital is being brought in by these two partners into the business. So I've written it, marked it as 1 because I want to keep track of which transactions I need to write in the journal. So the next one is on 2nd May 2015, which is after roughly a month, they open a bank account for the business in the state bank. So they open a bank account, fine, but there is no transaction, so we're not going to record this. And they deposit 3,000 million cash for various purposes. So now they are depositing cash. So I'm going to write transaction number 2. This is a bank deposit. You deposit some money in the bank account and remaining money is in the hand. The plant starts functioning smoothly. Now plant is functioning, but let it function. There is no monetary transaction being mentioned. So ignore this line. On 31st March 2016, this is the end of the financial year, they pay 100 million wages. All right, another transaction of wages to these shop floor workers for the whole year in lump sum. Now, only for simplicity, we've said lump sum, usually wages will be paid daily, weekly, monthly at the most, and they're paying it in cash. On the same day, they need to pay 200 million salaries to other employees. Okay, so point 4, you are paying salaries, but only pay 110 million via the bank account and remaining being overdue. And I'm going to club it in transaction 4 only. Salaries have been paid and salaries are overdue. This is another transaction for me. I'll write a complex journal entry for this. The products are well received, okay, and they record a revenue. They record a revenue meaning they have received the revenue. So I'm going to write it transaction 5 for sales on 31st March, end of the financial year, out of which they receive 400 million in the following year. Okay, not all the amount is received. I am again going to write a complex journal entry. Some amount received in cash, rest of the amount recoverable. An asset will be created. They have a check only policy. You have to write the journal entries for the transactions that you have identified. So I'm going to write 5 journal entries. That's what I've identified. And some of these are going to be complex, and I'm going to use the chronology as well. Okay, here is the format of the journal, and I'm going to write the date here. The date is 2015. So typically we write the year at the top, 2015, and then we write the month and date, April 1st. On April 1st, 2015, two partners start the business and they bring in capital to the business. So the journal entry for that is you receive cash. So you're going to say cash account is debit, and the cash is being received because two people, Rajat and Mayank, are bringing in 8,000 and 3,000. So I am going to write to Rajat's capital, and I'm going to write Mayank's capital. Mayank's capital. So till now we've been writing shareholders capital account. Now we have the name of the shareholder. So I'm going to write the name of that shareholder. So Rajat's share capital, you could write share capital, and Mayank's share capital account. And since it says it is cash, I'm following that. But this is millions, 3,000 million. This is a large business, and these people are filthy rich. So Mayank brings in 8,000 million and Rajat 3. So 8,000 and 3,000, and amount is rupees and is in millions. Rupees in millions. Okay. So the total cash that comes into business is 11,000 million. There you go. You've written the first journal entry, and you could write a small note here, which is called narration, which says being capital brought in by the partners. It doesn't say partners. Let me say shareholders. There you go, and you can close it with a small line, only restricted to the particular section. This is how you would see the book of journal. Let's move forward. The second transaction is on May 2nd, 2015. I'm going to write May 2nd. 2015 is already written at the top, so I'm not going to repeat it. So the business is depositing 3,000 million into the bank account. So bank account is being opened, and bank account goes up by 3,000 million, and the cash from hand is going into the bank account, same amount. The explanation is being cash deposited in the bank. And one detail that I missed is it is SBI. So you will say SBI bank account. State Bank, it was written. So State Bank, you could have multiple bank accounts. So you may want to keep track of that as well. So you may have a SBI bank account, an ICICI bank account, another bank account. So you write the specifics as much as possible. So transaction 2 is done. Transaction 3 is wages, 31st March 2016. Now the year has ended, 2016 has begun, and we are on March 31st. You are paying wages for the whole year in cash, 100 million to be paid. Okay, so I'm going to pay wages. I'll write wages account debit, it's an expense, to, does it say cash or bank? It says cash. So we're going to write cash to cash account. Again, very hypothetical. Millions of rupees in cash is not practical, but just for illustration purposes. And I'm going to write being wages paid to workers. And I'm going to close this. So transaction 3 is done. You pay for the whole year, and on the same day you need to pay 200 million salaries to other employees, but you pay only 110 million via State Bank, remaining being overdue. So salaries to be paid on the same day, March 31st. Salaries account debit, it is 110, and you pay some through SBI bank account. So SBI bank account, how much did you pay? You paid 110. You need to pay 200 salaries actually, and you pay 110. Sorry about that. So you need to pay 200 and you pay 110 through the bank account. And what about the remaining? The remaining being overdue. Whenever you have overdue, you have to create an outstanding salaries account, or any expense which is overdue. Outstanding salaries account 90, and you're going to write being salaries paid and outstanding. You could write more detail as well, but I mean, again, I said I don't want to make you an accountant, but you should know this is the process. This is the back end of the balance sheet and income statement. You have to know how these things work for you to figure out where possible mistake could be. Okay, so salary is done. Let's move on. The products were well received and sale. Transaction 5 on 31st March. So 2016 March 31st sale is taking place. So for the sale we have some money that is coming in. So products are well received. You record a revenue and you have a check policy for the customers. Okay, I did not follow the check policy for the rest of the stuff because it was written cash there. So let us assume this is only for customers. For customers, we follow a check policy. So they've given you a check, so bank account will be used here. 1400 is the revenue, and you receive 400 million in the following years, which means 1000 is what you receive right now. So you're going to receive money in SBI bank account, SBI bank account, 1000 debit to sales account, which is 1400. 1400 is the total sale. 1400 is total sale. 400 will be received in the next year. When you have to receive it, recover it, it's your debtors. So you're going to write debtors. I did not create sufficient space here. So maybe I'll just edit this quickly. I'll erase this and I will take a pen and I'll say debtors account. Debtors account debit as well, 400 to sales account, 1400. Again, amount is in millions, rupees and millions. You can write a narration being sales recorded during the year and some due. You could write more. Okay. Done. That's it. These are the 5 transactions that were supposed to be identified and written in the books of accounts. So I hope you have a stronger sense of how the journal entries from a story, from a paragraph, from day-to-day operations of business, how you will identify the transactions and how will you write them and how the journal will actually look. This is how the transactions are going to look like. No, 3-4 steps. You don't display all of that. That is just for learning purposes. I'll see you in the next practice problem.